This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Wednesday, July 16th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here at September corn up 4.5 at 405 3/4. August soybeans were up 9 1/4 at 1004 1/4, and September Chicago wheat was down 2 at 536. This morning we had an export sales announcement of 120,000 metric tons of soybeans to unknown destinations for 25. Good morning, guys. We'll jump right in here. I guess news coming out of yesterday. We've got an Indonesian trade deal, which I know we'll touch on here a little bit. We've got also, crush came back better than expected, 185.71. Oil stocks were lower as well. So kind of a continuation of that pattern there. On the crush side, so I guess, guys, let's jump right in. Justin, I guess on the surface, having taken a look at this trade deal, I think what's got a lot of people talking is this going to be the model, in terms of including ag and forcing some of these countries' hands in terms of buying our products. So I guess share a few thoughts there, and then we'll throw around the room.
Yeah, well, I don't know. Is the straight answer. I would think so. I mean, he's been pushing ag in a lot of his talks, a lot of his rallies. I would think that these trade deals will include ag to some degree. Indonesia, interesting one. I mean, the numbers that he put out there, we'll see what that means. Is it soybean oil? Is it corn? What commodities is it? It's certainly a positive. The markets didn't really react last night at first. But here we are, we're taking out yesterday's highs. It's funny because 2 days ago when we kind of gapped lower, when the markets kind of ignored the USDA report and pressed it lower, you could kind of feel the throwing in the towel, type feeling just from the industry, in my opinion. On the war room, I kind of said maybe we're getting a little ahead of ourselves here with a 186 yield estimates, and I got made fun of by a good friend who's a trader. So kind of the attitude is like, oh, if you say anything bullish or even not even bearish, you're kind of getting made fun of. So maybe we got close to just getting a little too optimistic on the yield on July 16th.
Yeah, absolutely. I guess looking at NOPA yesterday, I mean, all good in that sector, right? I mean, still on pace. It was the biggest month on record. I guess what's your take? I mean, oil stocks continue to decline.
The government did the job on the report of what what needs to happen. Now, price makes things happen, right? So they wrote down what needs to happen, right? Meaning that we have to cut soybean oil exports a ton. We're going to use it for, biodiesel. We're going to import oil. All those things happen at a price, right? Just like when you talk about, when people say, here's my supply and demand estimates, and if we just change yield, here's what the carryout is. Well, that's not really how it works, right? Demand changes based on price. So the USDA wrote down what has to happen, which makes sense, which is we're crushing for oil, soybean oil, and we're using it for biodiesel, and we can't export as much. But all that has to happen at a price. So prices dictate that to happen. So we're going to see record NOPA crush, I would think, every month going forward, or near record, right? We've already seen this the last year, basically. We're going to use a lot. So I think the 45Z in the bill, I think the changes that they made is pretty friendly, medium long term.
We also saw Justin. Corn open interest down 21, little over 21,000 yesterday too. So it'll be interesting to see by the end of the week what funds have done. Are they covering a little bit or what? Where that's going to go to.
Yeah, sorry, my computer completely glitched out, but
I was just commenting on open interest being down 21,000 in corn overnight. So be interesting to see where that fund position is, obviously beginning of next week or end of the week.
Yeah, no, definitely. Yeah, no, I would think, if we can keep this rally going just a little bit, get back into the moving averages. I felt like there's a lot of new shorts, kind of that press that market lower after Trump's speech in Iowa, that he didn't announce some major trade deals. The weather kind of turned a little better. I feel like there's a lot of new fresh shorts that kind of pressed us to new lows. So if you could get anything exciting, I do think there's, at least the fuel is there for a decent short cover rally.
Justin, we were talking before the show here this morning, and Dustin and I, we were talking in I guess hypotheticals or whatever, but I don't know if you know the answer to this, but generally do countries have state reserve programs? Because we were talking about Indonesia. So like, let's say you sign these trade deals, right? And they commit, $4.5 billion worth of ag products. But, in the free market, like how do you control private companies, if the price incentive's not there to buy US, like, does that just go into state reserves or like, how does that work?
Yeah, it's good. It's a good question. I do not know. I mean,
okay.
One of the things you would say is just like, you can't make a country buy something uneconomically, right?
I wouldn't think so.
So, now that being said, we are very competitive currently, especially, so it'd be a good time for them to buy it, so we can answer that question later, but it'd be a good time because we are competitive, right? So the government could go buy a big chunk. As far as like state reserves, that's a really good question. I don't know. Besides China, I haven't really heard that very often, as far as strategic reserves, but I still think that when you do these deals and you think about the number of dollars that they're exporting to us, to the US, $4 billion, $5 billion means relatively nothing to them, but means it's a huge implication to ag. Yeah. So it's something you have to be, I think, open-minded to Dustin's point. I think he talked about in the letter, like, we talk about, oh, it doesn't make sense. Like, why would they do that? They might not care. They might make a strategic reserve, to your point, Dan. Like, okay, whatever. I got to go pay $5 billion and buy corn and a bunch of different ag products. We'll figure out what to do with it later. Like, it doesn't matter. Like, it's so small to them, but it's very huge to us. So I think it's an important question. I don't know the answer, but it is going to be interesting to see, let's see the next couple of deals, if that's included. I would think it is.
Mm-hmm. Dustin, what are your thoughts?
Yeah, they're already buying just $3 billion plus dollars worth of U.S. ag products in the past. Their total ag imports are over $20 billion. So to reach that seems higher, and if that's an extra 5-10% cost to them, it could easily just be considered a tax, especially if they implement some sort of advanced state reserve system where they're still kind of giving companies within their country, kind of a free pricing system, but they're having to take on the losses of a higher import cost just to meet a quota. To Justin's point, it is a big number, because if that is just one of 10 countries that are going to sign this, something to this size, then that makes the phase one trade deal. And we all know what happened during that time frame when China had a $50 billion agreement. I think the market is going to the small disruptions in that export number are going to change the market's opinion potentially, especially when you got a very large short position. We're coming off of like Justin said, a fairly competitive price as well. We've been extremely low price compared to cost of production. So it's a good time for countries to start buying U.S. products anyway. Also, we've been putting this in the letter too. Like, global corn reserves are really not that high. When you take global corn reserves ex China as a percentage of carryout, we're holding on to about a similar size supply compared to use as we were in 2012. 2012, we had 750 corn at harvest. We're breaching $4 corn recently. So what's the difference? Is we are holding on to a much larger portion of that supply this year, and Brazil just continues to be a larger and larger powerhouse of resupplying the world every 6 months after our harvest. So I think that the world's been more comfortable running tighter supplies because it's coming at the right times of the year. But if all of a sudden we start seeing these trade deals, they mean so much more when the supplies are this tight and there's really not that much to give at the moment. And we keep forgetting that we're near pipeline for old crop right now. Like all the spreads, like Septis is very close to getting to a pretty sizable carry situation. I mean, at the rate it's going, it's plausible to expect that full carry is possible, Septidis. Yet we're supposedly scraping the bin with one month supply as we get to the end. It's kind of wild how subdued the market has been, and I have to think it's something to do with the fact that funds are very short corn right now, and that's partly why it's been so orderly. It could get disorderly very quickly if you start seeing this is one of the few deals that start getting etched out.
Yeah, that's really interesting because you look at, basis levels are kind of normal. Like kind of firm, but I mean, nothing crazy for, the amount of, corn that we're exporting, the amount of corn that we're using for ethanol, supposedly the tight carryout. We've got at least a couple months till harvest. So the next 2 months are going to be, super interesting what happens there. Like, I think everyone's in the industry has been kind of scratching their head on these numbers. Like, how is it so tight, but the market's so weak? Spreads are so wide. So I think it'll be an interesting, I'll call it an experiment, what happens here in the next 2 months. I think we're going to learn a lot about how that all plays out, because we haven't, to your point, usually we're at a very high flat price, when you have really tight carryouts like that, right? You're $7 corn and it naturally, it forces the farmer, not forces, but farmer wants to sell it, right? So you have, flat price kind of incentivizes that. So I think there's going to be some really interesting things that start happening with basis and spreads as we get into that next 2 months before we actually harvest the crop. So
Ben, share a few thoughts here this morning with us.
Yeah, I think that we heard all the narratives on why we were breaking, and certainly, by and large, really good crop to this point in the U.S. But the thing that they really needed to see was the bigger yield number, and they didn't get that on the July report. And I don't think anyone really expected it. But they've got, there's 3 weeks here until we get to that next WASI report, and we get a real grip on a better insight into where they think corn yield is at. And with a big short, you got some constructive things happening, which is key reversal on Monday. Close above 29 3/4 would be a weekly reversal, which is very rare. We're kind of in a no man's land here of, maybe not even any kind of profitable numbers and no crop insurance. So I think you have to have a little bit of imagination. I don't think it would take a lot to get this going. 2-week weather models have been dead Elvis sightings all summer long. We've been conditioned to expect failure in the market. And I just, I think you have to have an open mind here for a minute that if they want to come cover, it could get a little bit squirrely. And the backdrop of that is what happens with, there's a lot of banter going on about interest rates and things like that. There could be, and I don't want to paint too rosy of a picture because this is somewhat conjecture, but there could be a quick change on how commodities are viewed if we start seeing some aggressive interest rate reductions. And I know that's not going to help us today or tomorrow, but the people that are the longer term players are looking at those types of things. And fundamentally, on paper, at least on paper, there's nothing that's really super bearish about corn unless you really give us a monster yield and they keep jacking up Safrina. But with Safrina getting near the 50% mark, I think people probably have a pretty good grip on where it's at, right? 133 to 136, maybe somewhere in there. And with global supplies tight, I think that you got to have an open mind of what things look like going forward. We had a counter seasonal break. For a couple of years in a row, we've had a lot of pressure into this point forward into the end of August. Maybe we have a counter seasonal rally. So,
very good. One of our frequent listeners, people that watch the show, James Costello. James, tons of international global influence and funds, right? I mean, global funds that are trading markets. So, we don't get conspiracy. We don't get too deep into conspiracies on the show, but you do make a good point. Yeah, there's a ton of foreign influence in these global markets. As we got a couple minutes here, Ryland, huge swings in cattle the last number of sessions, and I think the one big thing to touch on too and get your opinion is we got these new tariffs scheduled to go into effect August 1 for Brazil. I think it's a big deal, and everybody's starting to take notice. And then open interest down 3,800 in hogs. So I guess share a few thoughts here this morning.
Yeah, absolutely. The trading ranges have been super wide. I mean, I think everybody's trying to figure out what's going to happen here in cash. We saw a little bit of light trade yesterday at a 239 in Iowa, 380 for dress. So, I mean, that's pretty steady. So overall, I mean, that's good news. And we're just kind of chopping everybody up right now, just with $3 up, $3 down, $3 back up. So obviously we're still kind of holding near contract highs. And I think you're just seeing that kind of consolidation up here at these levels. Producers are obviously in a really good spot right now, especially in the back end of the market. So I think you've got them looking to increase kind of coverage levels. And then on the other hand, these big dips, it seems like anybody that's waiting to buy anything on the speculative standpoint is right there. So, I mean, it just seems back and forth. We got a little stability in the beef market. We got choice up 65 and select down 2. So it looks like that's starting to flatten out. So I think we actually need some fresh news. Obviously, the tariff situation, the tariffs going on Brazil, tariffs on Canada, I mean, South Korea, you name it. I mean, obviously the bigger, I think, focus, and that was last week, I think, was those tariffs on Brazil. Obviously, like with the really tight cattle supply that we have, beef imports have really ramped up from Brazil. And overtaking Australia this year as being kind of our number one foreign source for beef. So this just kind of exacerbates the problem. That's why just the past couple of weeks, the market's just been super explosive, especially with the reclosure of the Mexican border. So you've got all these forces kind of working against any kind of weakness in the beef and the cattle market right now to kind of rejuvenate the supply from outside sources outside of the U.S. So we've priced in a lot of that, and I think the market kind of is asking, what the heck do we do now? How is this going to affect things down the road, 6 months, a year? What if the border doesn't open? What if we close the Canadian border, to their feeders? So it's just, once again, it's all kind of very scary in terms of how high could these prices go before you really start to really dig in on these packer margins. So that is a good question. I mean, I think it's yet to be seen. Really, we're in a price level that we had never really seen before up until this point. Then we threw a big geopolitical mess at the situation. So there's no real historical precedent for it. So it's just kind of more of the same, really. We'll see how it goes, trade the day to day. I think that's why we're getting the ranges we're getting. But on the hog side of things, more liquidation. We're still seeing that kind of technical breakdown gravitating toward the 100-day moving average in August. Looked like cash and cutouts starting to stabilize a little bit more here. So I think you're kind of exhausting the sellers a little bit. I think you priced in a lot of the geopolitical concerns right now. And I think there was just kind of a little bit more optimism that it looked like the tariffs being placed on Mexico were more so focused on tomatoes, and pork didn't really make it onto that list just yet. So I think the market's going to see that as a sign of sigh of relief for right now. But open interest has been decreasing. We're seeing these really heavy managed money long starting to bail out, and we're in that time frame where typically you see a little bit of seasonal pressure. Just demand starts to back off a little bit. So once again, I think we're going to trade the day-to-day kind of cash, cut out news at this point, and if there's any kind of respite in the headlines, that too.
Very good. Appreciate the update there, Ryan. Just came into the open here. September corn's up 3 3/4 now at 405. August beans are up 12. 1007 is the last there. And September Chicago wheat is down 2 3/4 at 535 is the last. Tomorrow morning, we'll have weekly export sales at 7:30 Central. We'll take a look at those and visit about those in the war room. We appreciate everybody that tunes in on a daily basis and sends comments. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.